Before we get started, please don't forget to like and subscribe and hit that bell button to get notifications of when we next post up a video. So when you come to the end of your term, the lender's going to expect you to basically pay that mortgage back. So not very many people can kind of find that money straight away. So coming towards the end of the term means that we can prepare you a few different options. You're going to be best armed with what to do next. What happens at the end of an interest-only mortgage? So the first option which you may have, which is probably the least desirable option, is going to be to sell your property and potentially downsize. And this means if you've got a bigger family property, which your family's grown up in, and you're now rattling around in it, essentially what you can do is to sell the property, release some of the equity from that, maybe buy something a little bit smaller and potentially downsize in something that you'd be comfortable in. The next option would be selling a slightly different property. So for example, if you have other buy-to-let properties or any other kind of properties, you might look to maybe sell those to be able to get the money to then pay back this lump sum payment. Another option might be selling off assets or potentially cashing in pensions. Obviously, we'd recommend that you take proper financial advice on this to be able to guide you through your best options. If you can't pay for your mortgage at the end of the term, there are a few different options that we can go through. Repayment options. So potentially we can ask the lender to maybe extend your term and look to remortgage your property and maybe then pay either some of the capital off or all the capital off over maybe slightly longer term. This might be extending the term by maybe 10 or 15 years. You've a bit more of an opportunity to carry on paying your payments, so you take a chance to kind of chip away at some of the capital. Now, there will be lenders, stress test and calculations in place to make sure that you don't overspend. So obviously, lenders are going to look at your income. They'll also have a look at your outgoings, and have a look at seeing how much they think you can afford month on month when it comes to kind of making those repayments. But definitely having a look and seeing if we can extend your term and paying some of the money back is going to be absolutely fantastic. Part of remortgaging, another option could be going on to a capital payment, which you've already looked at. And that basically means you're just going to start paying back some of the money that you already owe. So it means when it does come to selling your property or at the end of the term, you'll own less than what it is you currently owe now. What happens if you can't afford to fully pay off your mortgage at the end of the term? Other options we've done for clients recently will be things like, for example, retirement interest-only mortgages. So these are kind of special mortgages which still go on your affordability, but they will look at having no end date. So it means that if you're coming to the end of your mortgage now, and say for example you're age 55 or 60, potentially we can set up retirement interest only mortgage. They will still need to look at affordability and so on, but potentially that interest only mortgage will continue for the amount of time that you live in the property. So effectively, you still live in the property until the time that you pass away. Obviously, by the time you do pass away, the property will then be sold. The lender will then be paid back, or potentially, the mortgage will be paid off by anyone that you leave it to, and anyone you leave it to can decide then to retain the property or keep the property should they choose to, if they can pay the mortgage off in another. Retirement interest only mortgages tend to be for over 55s. It's a really good way of helping you stay in your home and continuing those monthly payments. Another really popular option is going to be equity release. Now, years gone by, equity release was deemed as being quite a dirty word because it was unregulated. However, this has all changed and it's just as regulated as residential mortgages, which means there's now proper processes in place. It's much cleaner, and really we have to make sure that when looking at equity release, the client really does come first. Which is not something that we deal with here, but we will refer out to an expert, and really they'll sit down with you, any family members that you might want to sit down and just go through the whole process from start to finish. Equity release can be absolutely fantastic. The rates that are offered for equity release aren't far off what you'd have on a proper mortgage anyway. So it means it's a really, really good option. Being able to make sure that you can either release money and maybe stay in your home, or potentially to allow you to stay in your home for forevermore until you potentially pass away, as long as you choose to keep the property. With equity release, you don't have to pay back any of the payments at all. So for example, you can add that to the amount that you owe. The other thing, the nice thing about equity release is potentially there isn't any credit scoring and there isn't any kind of affordability calculations as such. So it's a really, really good way for you to be able to live in your home and letting those interests actually build up month by month. It just means you haven't got to find that money from your own pocket. As I say, it's had a bit of a tainted past, but don't panic too much. Say it's now very much all regulated by the FCA. It's a much, much cleaner product to look at, and we think it's a really, really good option, which allow you to stay in your home, where some other options might allow you to do that and might come down to affordability. So that was a very, very brief run through the sort of options you might be looking at when coming to the end of your interest-only term. Please feel free to get in touch, and whatever you do, please don't forget to like and subscribe and hit that bell button for any new videos, tons of information on a weekly basis.